The market has tanked, sending a shockwave throughout the world. Are you prepared for more? You came here for the truth, so let me unveil that for you. Today we're going to look at what happened within the markets. Let's begin. Asia markets open after US stocks plunge. Look around the world. You can see on the right hand side as the markets open, they are dropping fast. It is a contagion that has made its way around the world, and it is not pretty, I assure you. Look at the VIX in particular. What you are looking at is essentially the volatility of the stock market. And when you look specifically at where it was just days ago, 13, and at its lowest point not that long ago in the past, it was near the level of 8. And shortly thereafter, rising to 37. In fact, this level here is one of the highest increases that has ever been seen. Now, there have been periods of time in history where the VIX has really accelerated in a short period of time. You will see, obviously, Lehman, it hits a historic high, flash crash, US downgrade, China, and now today. But what was significant about today was that after all this slowdown in the VIX, where it practically disappeared into nothingness, it shot up. But there's no catastrophe. There's no disaster. It's just the market ready to explode. Or should I say, implode. This here is basically just showing you, trying to short the VIX, what happens. People are essentially betting that what's going to happen. There were people, I should say, that were betting the VIX had gone too high, it was going to come down, and they took that bet and they lost that bet. In fact, I believe this was down 90%. A lot of people took the wrong side of that bet today. Now this here is a quote from the head quant at JP Morgan. Okay, so obviously the guy's a brainiac, but look at what he said. After going through just recently suggesting everything is just fine, nothing to worry about, markets will continue to rise. We also want to highlight a strong probability of policymakers stepping in to calm the market. That's right, don't worry about it. The central banks will be there to backstop any losses. All right, then he said this. Rapid sell-offs such as the one today can also be followed by market bounce backs as liquidity gets exhausted by programmatic selling. With next year's PE on the S&P now below 16, further positive impacts in tax reform and stabilization of bond yields, we think that the ongoing market sell-off ultimately presents a buying opportunity. That's right, buy the dip. Now, they're suggesting here, the head quant, obviously he has a lot to, how do I say it, a lot of propaganda to be spreading around. This individual here, deeply into the markets, deeply connected, and he can only say certain things regardless. But the quants, for anybody who has researched just even the last financial crisis, these individuals don't really understand risk. They are simply there to create complex formulas that nobody can understand, and then somehow use those in the markets, connect all of the world's financial systems into it, and then make it rise forever and ever until it doesn't, and then everything crashes. Okay, now look at this. This is the Asian markets dipping down significantly, particularly in Japan. And that shouldn't be a surprise to anybody because in Japan, the only one buying stocks is the central bank. So it gives the central bank an opportunity to get some exercise on its printing press. Look at the 30-year yield declining significantly. Ray Dalio, we've just had a taste of what the tightening will be like. Let's not forget that. As the Dow crashes, Betterment, Wealthfront users locked out of their site and their mobile app. Think about that for a second. You're trying to log in. You're scared. You're worried. What happens to you? Well, no problem here. You're just going to get locked out of your account and you can't trade. Oops. Oh, but don't worry because your money's insured. Well, I don't know how safe these people felt at the time where they couldn't get in to have their trades, do their deals that they needed to. Maybe they put stop losses in, but were those stop losses active at the time they needed to sell? How much volatility was there? Was there any buyers? At what price? There's a lot to be discussed here that people don't get into, don't think about in advance, and quite frankly, a lot of people get burned. Keep your eyes on what's going to happen with the market in the coming hours, in the coming days, whenever it is that you're watching this. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, check out the links below. You'll see my books. You can flip through them at Amazon. Take care.